Welcome to HAC's monthly commentary. Today I'm going to talk about what took place in the markets in December, what changes HAC made in its portfolio, and we'll take a look at what to expect in the market coming up in January. Well, first, if we take a look at December, December was a weak month. Typically on a seasonal basis, it tends to be one of the better months of the year, but it wasn't. It's partly because we saw some profit taking. From January to November, the S&P 500 was up over 25%. And don't forget, 2023, the S&P 500 was up over 20% for the whole year. So we saw a strong year in 2023 and a strong start in 2024 into November. We saw some profit taking place, particularly towards the end of December. Last month, we saw the S&P 500 down 2.5%. If we look at all the major sectors of the S&P 500, the only major sector that was positive was the consumer discretionary sector. A lot of the pressure, the negative pressure on the markets in December came from the rising interest rates. The yield on the 10-year Treasury note closed higher in December. It closed at 4.6%. Last month, HAC made some changes in its portfolio. Some of the major changes in the portfolio were exiting the material sector, which tends to do well in December, but last month it was a negative trend relative to the market. HAC exited the sector as a result. HAC also exited its position in the Canadian banks. Canadian banks, after their earnings, their Q4 earnings in early December, started to pause a little bit. As a result, HAC exited that sector overall. HAC also reduced its position in the industrial sector, which has been showing some weakness relative to the market. HAC also exited the uranium sector. Now there's some long-term positives for the uranium sector, but with the commodities in general not performing well at the tail end of 2024, we saw the uranium sector also not perform that well. As a result, HAC exited that particular sector. Last month, we saw HAC also take on positions in the technology sector and the Nasdaq 100. Now, these sectors tend to perform well on a seasonal basis starting in around mid-month and tend to perform well into January. HAC took positions in these sectors, and on a relative basis compared to the S&P 500 for the whole month, they actually did better than the S&P 500. HAC also increased its position in the small cap sector. Now, previously HAC had taken a position in the small cap sector, but it increased that position in December. The small cap sector has really been stumbling so far, even in a strong seasonal period. The market's still focused on the major big cap stocks in the S&P 500, but we could start to see that change in 2025. HAC also increased its position in the S&P 500, and it slightly decreased its position in the Canadian stock market. What should we expect in the month of January coming up? Well, on a seasonal basis, January tends to be positive for the stock market. We could see the market bounce coming from that sell-off that we saw in December as well. The big unknown is the inauguration of Donald Trump on January the 20th. We could see the stock market either go up from that or go down. It's really unknown. There's a lot of rumors about policies. We're not sure which ones will be implemented at the time. Maybe there's going to be a delay with some of them. So there's a lot of unknowns. We may see a little bit of a pause around that date. Maybe Donald Trump announces very market-friendly policies initially when he takes over on January 20th, which could give the market a bit of a boost. We just don't know that. So a lot of uncertainty in the month. Overall, though, we do see positive seasonal trends, and we still are in an uptrend for the stock market at this time, which is a positive. Thank you for joining me today. I'd love to know your comments on the markets and what possibly could take place in the month of January. Don't forget to subscribe, and we'll see you next month.